In your opinion, how is the future of Tesla stock going to be? If you believe Dave Lee, Tesla stock will increase tenfold from its current level. Today, you will witness why. Be careful to maintain your attention and keep watching. Lots of people, including analysts and investors, are constantly trying to find equities that are doing well. Due to the inherent unpredictability of the stock market, people typically wait to purchase shares until they see how the market is trending. Despite its often frightening volatility, Tesla stock has been gaining a lot of momentum recently. There are still some who are positive on the shares of Tesla. Dave Lee predicted that Tesla stock will go 10 times from here, and you'll discover why in today's video. The American automobile and renewable energy firm Tesla develops and produces electric cars, energy storage batteries for use in a variety of applications, including residential and commercial solar panels, roof tiles, and grid-scale solar panels. In 2003, engineers Martin Eberhard and Mark Tarpenning established Tesla Motors with the intention of producing electric vehicles. Before becoming CEO, Elon Musk, co-founder of PayPal, oversaw Tesla's early investment rounds. In 2008, Tesla debuted its Roadster electric vehicle. Electric vehicles and energy generating and storage systems are the company's bread and butter. They also create, build, lease, and market these products all over the globe. Automotive and energy generation and storage are the two divisions that make up the business. Famous YouTuber Dave Lee discusses the venture's goals and the rationale for investing in it. Investment 101 and the mind-boggling potential of assets to create wealth are topics that are omitted from the standard curriculum. His channel, he claims, is an unstructured record of my current ideas on investing and life in general. Lee, who covers every aspect of investing on his channel, known as a Tesla bull and devotee as well. He just published an article detailing how he amassed initial funds for Tesla stock at a price that was around 100 times its true value. In his original post, he revealed that he had anticipated a tenfold increase in Tesla's market capitalization, from $3 billion to $40 billion. After that, Lee said that the past could happen again. Like the original iPhone, he claims people are misunderstanding Tesla. In his view, Tesla is only at the beginning of its journey towards embracing complexity via innovation. After 8 years of owning common stock in Tesla, the well-known investor revealed his shock at the stock's 100-fold growth. For this reason, he anticipates a 100-fold increase in the stock price during the next 8 years. The extraordinary performance of Tesla's stock during the first 3 months of 2022 was, in fact, extensively reported and discussed. Despite this, there were a few stockholders who sold their shares after losing faith in the firm. In addition to continuing to do well, Tesla blew away everyone's expectations, including Wall Street's. Mr. Ronald American investor and mutual fund manager Stephen Barron, who also founded the investment management business Barron Capital, stated that Tesla easily outperformed Wall Street's projections of $18 billion in revenue and $2.20 to $2.30 per share. Also, analysts were wrong about Tesla's operational profit being around $1 billion. As a result, after-hours trading for Tesla shares increased by 5% to $1,017 a share, up significantly from $976 at the end of the trading day. Dave Lee went on to note that analyst estimates for earnings per share (EPS) aren't typically given much weight, and that many investors instead depend on their familiarity with the earnings report to gauge the performance of their preferred company. Revenue, margin, and other parameters. The fact that some experts are unaware of the majority of ordinary stock shares is, according to Lee, another issue with this approach. He even claims that there are analysts who work for companies without ever owning shares, which makes them careless about the company's profit or loss. Typically, experts and investors' expectations for young, rapidly expanding companies are at odds with one another, but Tesla has managed to overcome these expectations. As an example, Tesla's profits for the first quarter were higher than expected and in line with what investors had hoped for. In your view, where does Tesla's stock go from here? Please share your thoughts with us by posting a comment. Since Tesla only just reached or exceeded market expectations at the outset, Lee claims that the company lacked the initial momentum to continue pushing and reach all-time highs. Shares therefore increased by a meager 6% following the earnings call and announcement. Loyal investors had high hopes for Tesla and its leadership, so this was not unexpected. Lee noted that Tesla's good delivery figures were the source of this faith. Its revenue determines the stock price. Among the factors that contributed to Tesla's first quarter performance and the stock's failure to achieve an all-time high were production limits. In 2020, as the COVID-19 epidemic swept the world, Tesla's Giga Shanghai factory briefly shut down as a result of China's zero-COVID policy. Nevertheless, the performance of the first quarter in 2022 shows that Tesla seems to have everything under control. In order to sustain its optimistic surge, Tesla must demonstrate revenue growth, according to Lee. He went on to say that quarterly shipments of vehicles should outstrip investor forecasts, and that revenue should likewise above estimates. The stock price of Tesla should rise due to the company's intention to increase production by 50% by next year. In addition to Dave Lee, Gary Black also provided some predictions about the future of Tesla. The Future Fund LLC, an SEC-registered investment advisor that specializes in investing in growth stocks of firms making a difference in the world, was co-founded and is managed by Gary Black. Gary has worked his way up the managerial ladder at illustrious international investment management organizations for nearly 30 years. He thinks Tesla should have a market cap of $4 trillion, as the company is already worth $1.09 trillion on $100 in earnings per share. With a price-to-earnings ratio of 30, he sets a price goal of $3,000. He went on to say that Tesla's market cap would hit $4 trillion if there were 1.4 billion shares in circulation. According to Black, electric vehicles will account for 60% of all vehicles on the road by 2030, with Tesla accounting for 20% of that market. He predicts that Tesla would reach a yearly production capacity of about 10 million automobiles by the decade's end, considering that 85 million units of light vehicles have been sold globally. On the other hand, Tesla's stock has been on a downward spiral, which has worried some experts. According to them, the Shanghai plant's production process was impacted by COVID-19 limits, which in turn led to a number of vehicles that was much lower than their aim. On the other hand, Cathie Wood seems unconcerned about these issues. American star stock picker and investor Cathie Wood founded, serves as CEO, and is chief information officer of $60 billion investment firm ARK Invest, which backs cutting-edge technologies, including genomics and self-driving cars. Many consider Wood to be the game's most underappreciated investor due to her compelling case for investing. On the other hand, her very perceptive assertions are backed by actual findings. She went so far as to say that her firm, ARK Invest, thinks Tesla shares might be worth $4,000 by 2026. Finally, Dave Lee has maintained his long-term investment stance and is still bullish on Tesla's stock. Regardless of the ups and downs in the stock price, he is certain that Tesla will experience tremendous growth by 2030. As far as electric vehicle manufacturers go, Tesla is still at the top. Why is Tesla still the undisputed leader in the electric vehicle (EV) market? Musk revealed on December 28, 2021, that he has sold $16.4 billion worth of Tesla shares since early November, representing around 10% of his ownership in the firm. The fourth Tesla assembly facility, following in the footsteps of Shanghai, Texas, and California, was formally inaugurated on March 22, 2022, under the Berlin skyline. In addition, Tesla revealed plans to split its shares at its 2022 annual meeting, subject to approval by stockholders, in order to increase the authorized number of shares. This announcement was made public on March 28, 2022, according to the Standard View. Tesla Incorporated, TSLA, stock is currently priced too high. But profits and market cap aren't everything when it comes to stocks. Even though Tesla has been significantly overpriced for nearly 10 years, its value continues to rise. Having said that, Tesla stock has been falling sharply recently. It has dropped 6.42% to its current price of $663.90. It should be mentioned that Tesla isn't the only firm whose stocks have been spiraling downward, and that several causes contributed to this precipitous decline. Numerous unanticipated events on a global scale have contributed to this. For example, manufacturers were significantly impacted by the COVID-19 pandemic. To add to the arguments already stated, there is also the data provided by David Lee and other well-known investors. From here, Tesla stock will go tenfold, according to Lee. To see more videos like this, check out our channel.